there is a construction lag. And the construction lag has been there for a while.
Widening gap between marketable supply and constructed supply, reflecting there could be a structural risk in the market.
I'm assuming that most buyers are buying from reputed developers now who have demonstrated through their track record and brand that they will deliver. 6 months, 4 months should not be a bother. Challenge comes when the projects can cross potentially 12 months and 18 months.
Record sales, sky-high headlines, listed developers hitting all-time highs in 2025. Hi everyone, I'm Manisha Natarajan, and today on Let's Get Real, we are diving behind the glossy headlines. Now, Liases Foras, a leading data analytics company, has come out with a warning you just can't ignore. Its latest residential market report shows a widening gap between new project launches and actual construction on the ground. Now, these are worrying statistics. Construction has slowed sharply across top 8 cities. The share of constructed supply versus total marketable supply has dropped dramatically from 75% in 2017 to just 57% in 2025.
So if you look at the data which says that the marketable supply from 2018, which used to be 3 billion, has grown to become 3.5 billion. But constructed supply has remained at 2 billion square feet all along. So what is clearly indicating that the constructed supply is not keeping it pace with the launch supply. And that's kind of a concerning this thing. So that there's a widening gap between marketable supply and constructed supply, reflecting there could be a structural risk in the market.
That was Pankaj Kapoor, MD and founder of Liases Foras. So, what does he mean by structural risk? Simply put, builders are launching at a pace not seen before and selling just as fast. Now, the top 28 listed realty companies, believe me or not, sold nearly 53,000 crore worth of inventory or property in just April to June quarter of 2025. But here's the party spoiler. Construction just isn't keeping up. And in India, the buyer funds the projects, we all know that. When you book at launch, your payments are linked to construction milestones, aren't they? So if construction slows, the builder can't raise the next demand. He shouldn't actually. That slows the project even further because he doesn't get the money. That raises the risk of your project getting delayed. That's what's happening. Now, let's dig into how wide or deep this problem is. With me, Sanjay Dutt, MD and CEO of Tata Realty and Infrastructure. Now, he's one industry leader who does not sugarcoat. Sanjay, thank you very much. It's an important discussion and a timely one. So let me just start by asking you. Liases Foras report says all 8 cities. Is it really happening in all 8 cities? There is a construction lag?
There is a construction lag. And the construction lag has been there for a while. You must understand that out of 4 quarters that we have in a year, 1 quarter we lose. We lose to pollution control. We lose to flooding. We lose to all the festivals that we have with, most of the construction workers, 50 to 60 million of them come from Jharkhand, UP, Bihar, Odisha, West Bengal pocket. All of them will go back on various occasions. So we lose a quarter. That itself is a pressure.
Don't you build that in already, knowing that there is history of all of these things? There are patterns?
Yes, we have started to build that in, but it's very difficult to fathom that you can actually survive on this basis. Second, there is restriction by the government on movement of heavy vehicles. That adds to the pressure. Then comes the approvals. Now, approvals may come on time, but let's say they come during April and May, and then comes the monsoon. So you can't do, basement, for example.
My question would be that this is risk management, isn't it? In any business, sure. Even in manufacturing, it would be risk management. What is so specific to real estate? And you did reach a construction of 75% to marketable supply just around that 2017, 2018 period. Now you've slipped. So is it that everyone is launching furiously and there isn't supply of certain ingredients which go in, like labor?
So there is a labor problem, and it's also linked to the extent and magnitude of infrastructure work that is going on in the country and also across the world. So earlier, labor never used to go to China, but labor does go to Middle East, and they pay handsomely well. So there is that demand for skilled labor, which is not there. We, on an average, will be missing out on 25 to 30 million workers in a year.
How do you fix it? You'll always have that
So
problem. They have to be paid in dollars to the Middle East. You're paying in rupees. There is a cost sensitivity. You've already sold it at a certain price.
Yes.
How do you fix it?
short-term measure, pay better wages, performance-linked wages, create better living conditions, give them good food, ensure that we retain them, right? Have strategic tie-ups with your contractors. Now, I can tell you, majority of these developers, including us, are now making sure that we secure our contracts for long term, because you don't want to slip on it. So these are short-term strategies. Medium-term strategies, you have to invest in skilling yourself and retaining your own talent and helping your vendor retain the talent. Long-term solution, we know we won't be able to manage this in the long term. We will have to shift to different kind of technologies and precast, mobility, etc., those based kind of construction. For that, we have to go through transition of design and everything.
So give me a sense in terms of what are you doing as a company? I listened into Godrej Realty's Q2 numbers, and there was a question from an analyst saying, we can see that, collections are lower than targeted, which means that there are delays in construction, right? And they accepted. They said, we've ramped up from 21,000 to 32,000 laborers across all our projects, right? The move to technology isn't happening. Everyone's still focusing on expanding the labor base and doing better by them.
Most important thing in this business is that you have to work with tier 1 contractors. Tier 1 contractors have better resources.
They're just a handful of...
But guess what? Those tier 1 contractors want to work with the best developers in the country, also who have scale, and also who will ensure that their margins are protected and the payments are on time. The developers on the other side wants to ensure that they work with big developers because they don't have financial issues. They can pay the workers on time, do all the compliances, etc., and manage risk. Because eventually we are rewarding these contractors that if you deliver on time or before, here is the additional incentive that you can part with your staff and the laborers on the other side. So we're actually shelling out more money.
So is the risk across all 8 cities equal, or are there regions which are at higher risk, like NCR, where the market gets overinflated very quickly, and we also deal with Dark 3 shutdown during air pollution?
The highest risk is in NCR, Mumbai and Bangalore, and for different reasons. NCR, definitely pollution, and also lack of availability and very poor infrastructure during construction stages and in construction sites.
What do you mean by that?
For example, if you are in Greater Noida or if you're in New Gurgaon, the infrastructure connectivity is very bad. Let's look at Mumbai. Mumbai is high-rise. It's in the city. It's all redevelopment. It's all slum. Tighter locations, everything has to be bought from outside, and surrounding areas are all occupied. You can't do construction. There's very limited time for you to do. So it has its own challenges. And then we have issues in Bangalore, which road infrastructure and commuting is known to everybody. And also in these cities, the scale is the highest across all businesses. So office, residential, commercial, data center, IT, retail. So in these hubs is the maximum construction.
Are they building too much too fast?
No.
That's what I'm hearing, because you're saying that these cities are the ones which have warehousing happening, retail getting built, housing getting built, offices getting built. That's they're getting dark for labor shortages.
So yes, there is a challenge, but I'm saying from the government point of view, government has data for last 10 years. Government collects taxes from the developers and from the customer. In NCR, they collect external development charges, property taxes, maintenance charges, you name it. They're not able to catch up. So town and country planning department has to be well resourced, and it has to have execution power and should be empowered to execute these projects at a faster pace, because now you can visualize that going forward next 5 to 7 years, you'll have this much scale, which will need this much labor. why not create labor infrastructure camps where we have connectivity and therefore developers can execute faster? And execution faster also means the prices will not go up, Manisha. If the supply comes on time, so the overall agenda of the government to keep the homes less speculative and more affordable or more reachable within the reach will work.
You're talking about labor camps because you have this migration issue, you have labor going away and then it takes time for them to come back. You have a shutdown, again, labor disappears and has to be brought back. And this is a great idea, but look at what's happening to the funds that all of you pay in the building and other construction workers welfare fund, right? Not even the entire amount is spent. Some of it can go in for creating these things. Tell me, how are you pushing the government? Because this wage disparity
Yes.
also then can be taken care of if they are looked after, if they have medical benefits, if they have other government benefits that they are entitled to and are enrolled for. Why is the industry not galvanizing and pushing for it?
I think the writing is on the wall, but the developers are taking the responsibility on themselves because we have the onus of delivery and performance under RERA to the customer. We're doing all of this. So we're absorbing the 30 to 40% increase in cost for the laborers. We're spending on the labor camps. We're spending on the medical insurance, all transport, food, which is very important for these people. And of course, when they want to send monies back home, their identity card, their Aadhaar cards, etc., etc. All of it is being done by the developer. So I think that's where we have no choice right now.
All right. How should a buyer who's already bought into a project and now cannot switch, what are the red flags that he should be alert about? Or what are the questions he should be asking the developer who's doing his under construction project?
So buyers today are very knowledgeable and very smart. They know their rights. Maybe they know their rights too well. And RERA has given them the weights. I think they need to first differentiate between force majeure causes and the genuine delays by the developer. You know, COVID, everybody knew that we got 6 months of extension, but people ignored it. They need to recognize that. Once they recognize that this force majeure is 50% of the delay, then your optics change. And then you say, okay, the project is 6 months delay, right? It's still manageable. Now, under RERA, the developer is accountable for delay penalty, which we are taking the onus anyway. So there should not be any concern. And the developer, I'm assuming that most buyers are buying from reputed developers now who have demonstrated through their track record and brand that they will deliver. 6 months, 4 months should not be a bother. Challenge comes when the projects can cross potentially 12 months and 18 months. And for reasons which certainly doesn't happen in our case, would never be in most of the majority of reputed developers. But if it was to happen, that should be a cause of concern for them to then be alert about and ask the right questions to the developer.
Who's actually monitoring construction? RERA isn't doing that at all. In fact, they're not even cross-verifying sales numbers that the developers report, right?
I think that the RERA has created a very good framework where everything is uploaded. The market has access to the data. And I think markets, analysts, and the customers all are tracking it. So RERA has created that. They may not be monitoring it on physical basis, but obviously when the update and MIS comes, the gaps are visible.
The gaps are visible.
The gaps are visible.
Are all developers really reporting that well to RERA? Even amongst the top developers, I know that on project-to-project basis, there are discrepancies.
First of all, I don't agree with that. I think they have no choice. Payment plans are linked to construction. So if they're casting the slab and they're casting the final slab, all those milestones are documented. And the customer is smart enough to know. And then we send video clips, pictures, architect certificates to really ensure that there is no gap or there is no misrepresentation. So I don't think that is possible anymore.
All right. So now, on the basis of license report, on your understanding of ground reality, I know that a large part of the business has moved in the hands of branded and corporate developers. Having said that, now that you're agreeing that there are construction lags, maybe not inordinate delays, but there are lags, are you anticipating a 2015 sort of a situation of stuck projects anywhere in the country?
First of all, I don't think we will expect the construction situation to be the way we saw earlier.
Not in 2050.
Not in 50.
Okay.
Certainly not. We have far more disciplined developers, far more regulation. Financial closures are good. Cash sales are good. Their debt exposure is very low. So I think they're well resourced to address it. Markets can get impacted if the sentiments change, if the job confidence drops. Suddenly, the volume that the developers are building, which is highest ever in terms of value and size, and even the unit size, if those get impacted, that will hurt the developer. So the future sales and supply may get impacted. But the current supply, I don't think will get impacted because they're fully financed, totally on the ball.
Get delivered.
And they've been smart enough to budget additional RERA time, the point that you made. The developers are smart.
So what they were asking for 4 years for project completion, now they're already giving 6 years as a deadline.
But 6 years is not a 6 years. 6 years is just 5 years. We lose 1 year in pollution control and flooding and anyway.
If you insist.
Yes, we lose. Earlier we were just naive and we were just not counting that. And the customer needs to understand that those are force majeure.
Let me come to the longer question because you've just picked it up saying that if the agar hawa badalti hai, if things change, right? And now everyone has been calling some sort of a correction in because all assets have moved up at the same time, all boats are rising, that there's bound to be a correction, right? For luxury housing and price rise, when you think the party will end? Or let me put it the other way, how long will the party continue?
The party is only getting better, Manisha. And I have a very different take on luxury. It's no longer about the price per square feet that you pay. People want to celebrate their life. They made it. They've arrived. And COVID has taught them they were not going to enjoy their life. Then what's the point of the wealth? And it's no longer status. It's no longer my house has to be bigger or the best address or I want to have the biggest club and all that. They genuinely want quality life. So they want their friends and families. They want to socialize more often. They want to go out more. They want to entertain themselves more. And the new luxury benchmarks are only getting better. So the next wave of luxury, you will see that we'll break global records when it comes to experience. It's no longer real estate. It's all about experience.
I'm talking about price and sales.
Prices are directly in luxury. Prices don't matter, Manisha.
They do.
As you already seen it.
In Mumbai market,
If you're talking
there was a
4
lot
crore to 5 crore, yes. But I'm not counting that. I'm talking about the luxury, which is really the uber rich.
let's talk about the
mid-segment.
Let's say the luxury. We just spoke about ultra luxury, right? So in luxury, everyone's moved into that sphere, right?
Yeah.
Nobody's even launching now on the 3 crores in any of the top 8 cities. So this 3 crore to 7-8 crore bracket, all big developers, reputed developers have moved into that bracket. In fact, 3 is also a hard buy to show, right? How long will this party continue?
You have the best example in Delhi. Go back
The same irrational market. No, irrational prices will stay.
Go back to Gurgaon. The difference that you saw between Aralias and Magnolias and Camellias.
And we moved to ultra luxury.
No, it's not luxury. I'm saying Magnolia was a very different product at that point of time. And it did drop in prices. But next wave, when it came, it went up. So for a short term, the buyer may feel that, you hit the stagnation and it's a raw deal. But if it's a right location, right product, right amenities, and its connectivity is better because now metro and highway connectivity also matters, that setback will be very short term, Manisha. It will not be that this is a bad decision.
Are you all of you never going to move to mid-income housing ever again? Where are the homes between 1 and 3 crores? They've just disappeared, literally, from top cities.
It's a controversial question. The government has ensured that you pay 50% in taxes and cost of approval and cost of doing business and eventually cost of steel, cement, even though the GST optically seems that has to be lower, has not impacted the cost at all. And we know that it will only going to increase even further. So I think the bigger problem is how do we address the affordable issue, which can only happen with the intervention of the government and incentives, and not incentives just for developers, but
So,
Yeah.
this is it a kind of sad that 1 to 3 crores, even that segment is now getting lower and lower priority and is almost going missing from top cities where there are jobs? Where will these young people go? They've been priced out of the housing market. What would you say to them, Sanjay?
Worse the infrastructure, higher the price. Living in a 1 crore apartment has seen a rise in his salary Form 16 by 15 to 20%. And is buying a 3 to 4 crore rupees, coming closer to the place of work and paying a premium because the infrastructure has not caught up. So it's a movement and progression. And people who are at the initial stages of their career who don't have the ability to buy, you would remember our parents bought homes in their mid 40s and 50s. I don't think they bought it when they were 20s. But today your expectation is that the kid of 20 and 30-year-old should have a home. And there's nothing wrong with that.
Not at all. 20.
Nothing wrong with that.
Definitely.
But they can afford with 1 crore to begin with. And as they see their Form 16 go up by 15 and 20%, which also is not sustainable, they can buy a 3 to 4 crore rupees a house.
All right. So you're saying buy a 1 crore home wherever it is and then upgrade.
And hedge your risk because you already bought, let's say you bought 1 bedroom. And by the time you are in marriage, you want 3 bedroom, right? At least you hedge 1 bedroom. And then you have to buy only 2 bedroom by relocating to another place. That's how it is. That's how we've done.
Okay. So I can see excitement all around, right? Happiness, smiles on everyone's faces because the business is good. Anything at all that gives Sanjay Dutt sleepless nights?
Market sentiments and approvals on the projects.
Okay. Explain.
If we get this continued story of growth and positive sentiments and job confidence, I don't think we had any issue when it comes to marketing and delivery. Second is we need to make sure that our approvals come on time so we can execute on time and make the desired returns on our projects. If we're not delivering returns, then we lost the whole purpose.
Right. So still there are some areas of worry there. All right. How optimistic are you in general about India's future? Because yes, we keep hearing about a recession coming, but long term, everyone seems extremely gung-ho. Is it all that good?
I think it's strong. So when I interact with corporates, because we do have a commercial business, and office has gone to 85 million square feet of absorption. That is going to continue for next 5 to 10 years, which means more GCCs. GCCs have reached 100 million square feet, more domestic consumption. This year, Indian companies' share has gone up to 45%. So when you look at these data points, it gives me a lot of confidence that this economy is growing. Yes, we know there are troubles, trade wars, whatnot, but India somehow has always had challenges. So we have survived in every chaos and crisis, including COVID, and we bounced back out of it. So long-term prospects are good.
Okay. Final question. The brand promise of Tata. How's it been working with the Tata Group? I know it's now been long enough, but what's the brand promise and how's your own?
First of all, if you're working for Tata, it's a big responsibility. You have to ensure that what the Tata as a brand stands for, you preserve that in full spirit. Trust, transparency, ethics, governance, you cannot compromise those. Biggest is customer expectations. So they can be just any developer. And then there is Tata Housing. Same customer will have 2 notches above expectation at Tata Housing. And guess what? That's how even the management feels. I get calls from my customers who took possessions 15 years ago. We handed over the project. They had some issues. They should have done some prevention, maintenance. They have issues. And we send our engineers to see what can we do, how can we educate them to fix the problem. That's the Tata brand promise, that it's not customer centricity, it's customer obsession.
Sanjay Dutt, thank you very much for joining me today. Let me close with the takeaways from this conversation. Yes, construction delays are happening. Large developers are managing risks better. So if you bought into one of their projects, you will get delivery. Things are not as bad as 2015, but there could be delays in mid-tier or smaller developer projects. Be prepared for it. Before you shell out your next check, make sure that you actually go on site or at least have enough evidence that the payment is made on that construction linked plan that was promised to you. Thanks so much for watching Let's Get Real with me.